March 2nd, and this is, of course, your daily financial news. My name is Michael Zuber, author of One Rental at a Time, book you can find on Audible and Amazon. And before we get into the day financial news, a couple of quick things. First and foremost, want to give a shout out to Dion. Dion's YouTube channel is Dion Talk, Dion Talk. Give him a look. He actually just reviewed my book One Rental at a Time, and I thought he did an amazing job. I thought his feedback, thoughts, takeaways was spot on, and his critique of my audiobook or audio version is spot on as well. So again, give him a look. It's about a 12-minute video or so where he reviews One Rental at a Time, kind of his takeaways. And again, I thought it was very nicely done, and I appreciate the review and shout out. Thank you very much. Also, he will be on I think it's the Bigger Pockets podcast with Brandon Turner and David Green here shortly. He'll let us know when that is published. So congrats to him. That is wonderful. Next up, we obviously have a couple of experts on Tuesdays. You got your boy Matt on the East Coast, the ninth grade dropout coming up, the lumberjack millionaire or the lumberjack landlord, I think. We got Omar later. So again, a very busy day for you on One Rental at a Time. As for the daily financial news, we've been talking about the 10-year Treasury. I've been telling you I think the Fed can successfully combat the disorderly behavior of the 10-year for at least a little while. And it looks like my suspicions are they're going to leverage a tool that they used twice. The first time they used this tool was 1961. Sorry, I'm a little bit too young to remember that time frame. But the second time they used it was 2011. So we are likely going to see something they call Operation Twist. So this is an interesting Fed maneuver, and it's exactly what I was talking about, right? They have the ability to fight the bond vigilantes for a short term. So this is what they're going to do. They are going to buy the short end, say 100 billion a day, 50 billion, whatever it is, a big ass number, which is going to raise the front end because again, it's close to zero, right? They want to raise that so it doesn't go negative. And then they are going to buy the back end. This is what I was afraid of. This manipulation, this all out, I don't know, just unusual behavior, again, used once in 1961 and again in 2011, right? So again, it's unusual behavior. It's going to have an impact. And in the short term, it will work. They're going to flatten the yield curve, right? The yield curve is as steep as it's ever been. Again, the yield curve is the short end, and call it the 10-year. When that is steep, typically the economy is expanding. Typically, banks make a lot of money, right? Because they borrow here, they lend here. Good for them. They want to cool that off. They want to make sure the 10-year doesn't get away from them. So again, I believe, and they could announce it as soon as mid-month. I think there's a Fed meeting March 15th and 16th. It wouldn't shock me if they announce it then. If not, it will certainly be the meeting after. And again, this is how they're going to keep the long end low. They're just going to buy it. And again, the Fed doesn't have to make a profit. So they don't care if the 10-year is 1.6, 1.3, 1.0. They don't care. They want it lower. And this is what they're going to do. I don't think this carries them through 2022. But it certainly will carry through 2021. It will put a buffer on the 30-year mortgage. I believe that is another way of keeping it low so the economy really gets going. So again, I suspect very quickly we will be hearing more about Operation Twist. Don't you just love these names? Just crazy. Another thing to realize, again, trying to go through Warren Buffett's letter, which he released on Saturday, he is reminding us of the behavior of banks when rates are low. I was around in the 80s, but too young to really be in the know. The SNL Crisis was really born out. SNL stands for Savings and Loan. The SNL Crisis was born out of low interest rates And banks, specifically savings and loans, who at the time didn't operate under the same bank charters, they started to loan to riskier and riskier borrowers, earning higher and higher interest. Makes sense until the borrowers go bust and then they have bad debt and then the crisis implodes on itself. Warren Buffett warns of this. Basically, bonds are not the place to be. If you're a pension or insurance company, you run the risk of chasing yield elsewhere, which can lead to a bad ending and perhaps a crisis eventually, like the SNL crisis. So again, warnings from Warren Buffett should never be ignored. He has 50 years experience and really, unlike a lot of talking heads, I don't think he talks his book a lot. He's already got enough money. He doesn't care. So that is interesting to think about. A couple of earnings announcements that came out. Again, we typically talk about the week ahead on Saturday or Sunday. Here are a few from Tuesday. Zoom Video was one that I thought, might probably will blow it out, which they did. They beat top and bottom. I suppose that they might start talking about tough compares. I was wrong. They blew it out and frankly raised guidance. At this point, they do not see the good times ending. Maybe, but history tells me reality will hit them eventually. I don't know about you, but if I was working a job, I would get tired of Zoom meetings. But not yet. They raised guidance, so I expect their stock to be up. Target blew out the numbers, top, bottom, same store sales up over 20%. To me, this is really two things. One, kind of shows the decimation of retail across a lot of the U.S., right? The big got bigger, the big got stronger. But it also, I think, shows the middle class starting to feel a little bit better. This is not really a holiday season, right? February and January numbers, but it'll be interesting to see if this continues. And again, I think it will, right? The stimulus, the 1400's coming, unemployment getting goosed to 400. I think Target will be up moving forward. Kohls, one of those retailers that kind of not been doing great. They beat top and bottom and reinstated dividend and corporate buybacks. Again, a strong sign that they see a rosier economy going forward. And folks, this is stuff I was waiting for. When are companies, let alone retailers, going to start talking about what they see coming? And a company who, in the past was conserving cash because they didn't know what was going on. Now they're going to do dividends and stock buyback, so they're using their cash. That tells you that they see good times ahead. AutoZone, kind of told you this one was coming, right? Just crushed it again, beat top and bottom, same store sales up 15%. People are just working on their cars, staying at home, and things of that nature. And then Lemonade. This is one I thought would be a high flyer that could get punched in the nose, and it looks like they did. First, they beat top and bottom, but it's very little about the current or the last quarter. It's about the future. And they gave weak guidance. I haven't checked their stock this morning, but I would suspect that it is down. One of these high flyers, one of these unicorns, talking about the future not being as bright, I would suspect hits their stock. Next up, we got real estate brokerage Compass, looking to take advantage of the hot housing market. They have filed to go IPO, initial public offering. They saw 56% surge in revenue in 2020. Is that just nuts? We had a pandemic for like 10 months of the year, and Compass did 56% more revenue. That's with no inventory. Man, when inventory shows up, it is going to be interesting. They did $3.7 billion in revenue. They have 19,000 agents. A couple of stats I took from their paperwork. Next up, we have Instacart. Frankly, I look forward to the day we stop using Instacart, but we use it weekly, it seems. Their valuation doubled in 5 months. 5 months ago, they raised $200 million at a valuation of $17.7 billion. Fast forward 5 months, they're now getting a valuation of $39 billion on a $250 million raise. They actually are the second highest valued unicorn, means non-public company, to Elon Musk's SpaceX, I think is like $73 billion or something like that. And then lastly, as we are starting to get into this year, I'm starting to think about where does this all end up? Where does the stock market end up by the end of the year? I think there is a rotation by the end of the year. The question is, when does it start? Has it already started? Right? Do we, the grand reopening of the U.S. economy and the consumers? I think it happens this year. What happens to the real estate market? I'm in the real estate market. Much of my net worth is tied to the real estate market. My cash flow is tied to the real estate market. What goes on? I think the real estate market, frankly, goes higher. I think inventory does go up, but I think demand continues to outpace supply. Even if supply doubles, I think we have demand that far exceeds it. I think we are changing behavior. I think millennials are going to show us the way. Millennials are going to be important because they are first-time buyers, right? The move-up buyers that I think are coming, they sell one, buy one, so it's kind of net neutral. But first-time buyers, millennials, they come in, they absorb inventory, right? They don't have a sale. They exit mom and dad's, or they exit a rental. This stuff's coming. I really think it's important. There will be some cities that are forever changed because they're becoming millennial hotbeds and work from home and things of that nature. What happens, with the stock market as far as we have the great rotation, but is it down at the end of the year versus now? I don't know. Cheap money, asset inflation, going to be interesting. But GDP, I think GDP for the Q1 could be north of 5%, maybe 6 or 7. I think Q2 is perhaps even higher than that. But then I think it kind of moderates because, again, it builds on itself. But I think 2021 is a year of growth. It is a year of moving forward. I think inflation, I think higher interest rates will be a problem, but they're 2022, 2023's problem. So I see a good year net. I do think we have some asset bubbles forming, which we need to be careful of. But in the end, I think consumer comes out. I've been following the consumer for 20 years. I think they're tired of being cooped up. They're going to flex their muscle. We got a lot of savings on the sideline. We're sending a lot more money into the system. So I think it's going to be a pretty positive year. Let me know what you think. Love some feedback below. Getting ready for a couple of hours of interviews for you. We got, again, Matt and Omar today. Thank you very much, everybody. Enjoy your day. Like, subscribe, comment, have some fun. Bye.